survey. Anyway, before we go to numbers, what all happened in last 1 year, so I'll just tell you what is the reason economic survey is presented and how it's supposed to be understood. So whenever we talk about economic survey, one day before the budget, office of economic advisor would be trying to prepare a document in the last 1 year. So probably from last April 1st to March 31st, what all happened in various sectors. Means from last April 2025 to present March 31st 2026. Probably still we are about to reach March. So all important economic events that have happened in all the sectors: macroeconomic overview, fiscal, inflation, monetary policy, banking, external sector. In simple, last 1 year all economic current affairs are compiled, and in which sector we were able to achieve the target, what are the reasons for achieving the target, in which sector we are not able to achieve the target, why we are not able to achieve the targets. So in simple, SWOT analysis of economy in last 1 year, both from global perspective and domestic economic perspective. So this is called as economic survey. In a simple way to tell, if you go to a doctor to understand the present disease or the present health problem, he is analyzing what all happened in the last 1 year. So exactly, economic survey will give us glimpse of what all have happened in the last 1 year. From UPSC exam perspective, you need not read all 700 pages or 750 pages. First chapter will provide the summary of all the chapters, which means from each chapter there are some obvious data, meaning there is some obvious data, there is some numbers, and there are some specific events which have happened because of which we were able to achieve the target, or we are able to meet the target, or despite the problems we are able to withstand ourselves. So this is how economic survey should be studied. I don't say that you should not read at all, but everything from first page to last page is not important. Also every number is not important. So macroeconomic overview meaning, if you look at those data, it should tell us some overall what is happening in the economy. Only those numbers are important for us. So probably I'd be spending time on overall macroeconomic survey analysis plus each chapter summary also I'd be telling you. So that once you listen to the class and read the summary, it should be okay with prelims as well as mains. So that you will not be burdened with too many pages of the economic survey. So before going to that, economic survey in preface, they'll open up these words. In the global economy, there is global uncertainty. So despite this global uncertainty, so Indian economy is showing great resilience. Of course, now two terms. Indian economy is having Goldilocks period. At the same time, Indian economy is also now in middle income trap. So let's try to understand the meaning of these words. Now what is the meaning of global uncertainty? So do you know that there is something called business cycles? Boom, slowdown, recession, depression. So it opens up with saying that there is global uncertainty. What is the meaning of global uncertainty, sir? In the global market, if you talk about, so there is uncertainty. So what is because of uncertainty? Because of changing geopolitics, different wars, and different economic political conflicts, global economy is not in a good condition, which means average GDP growth rate of the global economies are not so good. So US, India are doing well. Europe growth rate is moderate. China is suffering from various internal problems, crisis, and China is facing some property issues. Also, if you look at overall global So USA's growth rate is good comparatively. India's growth rate is comparatively good. However, European growth rate is moderate. Whereas China is suffering from its own internal crisis or internal problems, you can say. So despite this global uncertainty, still our economy is growing better, because still India is the world's fastest growing economy in the world, despite all these problems. Now, what exactly is meaning of this Goldilocks situation in a country? Goldilocks situation in a country means, see, it's a macroeconomic word which is generally used to understand what exactly the meaning of the word. So Goldilocks economy, sir. So whenever we talk about Goldilocks economy, we need to understand a situation in which macroeconomic stability is available in a country. When we say macroeconomic stability, how can we say that there is macroeconomic stability, sir? Simple. Inflation seems to be under control. Stable GDP growth rate. Plus we have support of huge forex reserves. Anyway, I'm going to explain all of them in detail. So if economy is providing flexibility for us to take policies with this conditions called macroeconomic stability, where relatively we have inflation under control, meaning inflation within the threshold of 4% plus or minus 2%, and GDP growth rate is stable relatively. So stable growth, no abnormal fluctuations or uncertainties in GDP growth rate, plus we have support of adequate forex reserves. So this will provide you a flexibility to pursue our dreams, to focus our policies, to achieve medium-term targets and long-term targets. So this specific situation is called as Goldilocks economy. Probably you might expect in prelims also. So good macroeconomic stability will provide a flexibility for the government to take appropriate policies. That is called as Goldilocks economy. Now, of course, just like every developing country, we are facing a dilemma. That dilemma is called as middle income trap. So what is the meaning of this middle income trap, sir? In a short span of time, a country would come out of from least developed and it becomes a middle income. So World Bank classifies countries into three categories based on per capita income: high income country, middle income country, low income country. We use the word least developed country, developing country, developed country. So India is classified under what? Middle income country, meaning developing country. So every middle income country is facing a dilemma. So what is the dilemma, sir? So whenever we talk about in dilemma, whenever we use the word in middle income country, so the country is facing an ethical dilemma to choose between welfare policies and capital expenditure. Because if you look at India's main ethical dilemma, to develop ourselves, we have to focus more on capital expenditure. On the other side, majority of the population is living in below poverty line, or at least 50 to 60% of the population. Still, we need to focus on welfare policies. So, whether we have to make a choice between welfare policies or capex, it's a dilemma. Of course, very interesting to know about is, so if you notice this year budget, government did not announce any freebies. Meaning we are clear, okay, let's try to focus more on capex, capital expenditure. So middle income trap is a situation in which in less time a country would come out of least developed to middle income. But it takes a lot of time for a country to come out of middle income to high income, because we have to focus on capital expenditure, we have to focus on infrastructure development, we have to focus on skill development, we have to convert most of the population into working population, skill development. Apart from that, we have to ensure that overall majority of the population or most of the population would become working population in the future. So right now we are facing this dilemma called middle income trap. So despite this, we are achieving a good stable growth rate. So this is what is the opening of economic survey says. And in fact, it says economic survey 25-26, high growth rate, resilient, and we want to become Viksit Bharat by 2047. What exactly is meaning of Viksit Bharat by 2047? We want to improve our per capita income. We want to improve our nominal GDP at least to $36 trillion by 2047. So how do we increase per capita income? By providing skills to more population, by creating employment opportunities, and by shifting the population to some stable income jobs over a period of time. If our GDP increases, if our national income increases, if our per capita income increases, India would be moving from middle income trap to high income country, which is our target called Viksit Bharat by 2047. So this is the big picture under which economic survey opens up with the statement that theme is pushing the growth frontier. So economic survey, the opening theme is pushing the economic growth frontier, meaning despite some negative circumstances in the global market, we are trying our level best to grow. So which means by looking at the last year conditions and by understanding the global economic circumstances. So if you look at economic survey estimates that India still remains the world's fastest growing major economy, meaning if you look at despite all this circumstances, India is still world's fastest growing economy. In terms of nominal GDP, we'll talk about numbers also, don't worry. Which means we compare the GDP growth rate compared to other countries and major economies. India is still world's fastest growing economy, which means despite global conflicts, despite global energy related disruptions, still Indian economy is one of the world's fastest growing economy. In fact, we are the world's fastest growing economy, which means yes, so we are able to withstand global uncertainties. Now coming to the specific number that economic survey is talking about. See, economic survey estimates 25-26 economic survey estimates that Indian economy would grow in the range of 6.8 to 7.2%. So economic survey 25-26 is estimating that in the optimistic scenario, Indian economy would grow roughly from range of 6.8 to 7.2% in which year, dear? Financial year 27. Meaning, based on the last year global circumstances, domestic economic conditions, last year domestic as well as global micro and macroeconomic conditions, if optimistic situation continues, India would grow in the range of 6.8 to 7.2% for the financial year. Why are you saying this, sir? How can you say this, sir? Our growth rate will be approximately based on this. Because you study something called nominal GDP, something called real GDP. What do you mean of nominal GDP? Total final value of goods and services produced at market price is called as nominal GDP. So in the last financial year, nominal GDP stood at, in the last financial year, nominal GDP roughly for 26 we are talking about financial year 2025-2026. I said something. Despite global uncertainty, so US economy is doing well, Indian economy is doing well, Europe is facing moderate growth, China is actually facing deflationary pressure and property sector crisis. Despite all this, so our nominal GDP last year roughly was 357.1 lakh crore. So 357.1 lakh crore. So based on the last year nominal GDP, despite the uncertainty, still our growth was this. So we expect in positive circumstances. So even if the global economic conditions are not so certain, our expected GDP growth rate in the 2027 would be 6.8 to 7.2. So should we remember this? Yes, because this one number will tell you that our economy is doing well. It has done well in the last year, it is going to do well in the next year also. And despite macro challenges, still we have grown by this much last year. So we might expect to grow by this much. So this is one obvious data number you have to remember. So wherever I say obvious data number, only that number you need to remember. Otherwise for every number you need not remember at all, because it will tell you a macroeconomic overview. So in a simple way to tell, overall written marks, it will tell something. Overall written marks in the exam, it will tell us something. Marks are good. What does it mean? So which means what? It's a obvious data. This obvious data is going to tell you overall what all have happened. Obviously, if mains marks overall are good, means performance in all the subjects is good, optional is also good. That's what we assume. Then only overall marks would increase. Similarly, overall macroeconomic perspective, okay, this much is the expected GDP growth rate. What are the reasons? They are going to give us. They are going to give us, look, this is what happened. Despite that, we are trying to go. So I explained the meaning of the word. Goldilocks economy, middle income trap, and we are trying to come up with, so what is the reason for growth of this? See, and we need to understand a term called capital inflow and capital flight. Probably this is external sector term. So you will study a concept called capital inflow and capital flight. So capital inflow means because our economy is doing well, because our financial stock markets are doing well, because our government is announcing positive economic policies. FPI, have you heard about this? Foreign portfolio investment. FDI, foreign direct investment. So if more capital is coming to our country, then that is called as capital inflow. Incoming capital, that's why that is called as capital inflow. Why are foreign investors are interested in our country, sir? One, factors of production is available at cheaper price. Relatively, government policies are supportive, and government is announcing several tax exemptions. So also good law and order, stability, policy certainty, and government is committed towards achieving its goal of Viksit Bharat. Meaning, for a foreign investor, when he is thinking in terms of certainty, risk, return, investment, it is considered to be good. Why it is considered to be good? I'll tell you. Because our sovereign ratings also got increased. Now, what is meaning of capital flight, sir? If any incident that happens in our market, probably our economy, the foreign investors are thinking that it is not good to be in this country, and if they move out their capital, that is called as capital flight. So if you understand the last year capital inflow, if you understand the last year capital flight, overall India is able to attract, so major FDI, foreign direct investment, in which sector? Service sector. So one of major India's capital inflow is in which sector? Service sector. Also, you will study something called how do we estimate GDP. So GDP is estimated in different methods. Remember, income method, expenditure method, production method. So if you remember, national income is estimated in expenditure method, something called C plus I plus G plus X minus M. Remember? So if you remember, national income in expenditure method, to understand, we calculate what is C, sir? Consumer final expenditure. What is I, sir? investors' final expenditure, final consumption expenditure. So G, government expenditure. X, exports. M, imports. So in a simple way, all of you know that there is something called circular flow of money. So what's meaning of circular flow of money? In any economic activity, there are two sides of the coin. So income of one person is expenditure of other person. So expenditure is increasing, meaning income for factors of production is increasing, meaning more economic activity, more circular flow of money, more GDP growth rate. See, for you it is expenditure. For the hostel owner it is income. For you it is expenditure. For the hotel owner it is income. So expenditure is increasing, meaning economic activities are increasing, circular flow of money, income for others is increasing, which is facilitating economic activity. Why I am using this word? Because economic survey says, what are the primary reasons for our estimated growth rate of 6.87%? So why economic survey is pointing out our GDP growth rate would be in the range of 6.8 to 7.2. That's what we have written exactly. The economic survey gives the reason. Two fundamental key drivers of this is private consumption expenditure and investment is growing. What is the meaning of private consumption expenditure? C is growing. So C means what? Private consumption expenditure is growing. Apart from that, investment, I, investment is also growing. These are the fundamental key drivers of expected economic growth. If we talk about numbers, out of total GDP growth, major contribution is coming from private consumption, around 61.5% of GDP. What is the meaning of private consumption? When private consumption increases, if a person's income increases, what happens to spending also? What happens to consumption also? So private consumption is increasing means what? Income is increasing. As a person's income increases, expenditure on non-food items increases. As a person's income increases, expenditure on health conscious food would increase. So we are purchasing more and more electronic items, cars. We are purchasing so much of consumer durable goods, meaning the purchasing capacity and the income is increasing. See, obviously, if you are getting 50,000 per month, look at your consumption pattern. If you get 1,50,000, look at your consumption pattern. So private consumption is increasing. Investment. So economic survey points out that roughly around 30% of GDP is contributed by investment. Because of investment, what is happening? Money is moving from the investor to the supplier, the contractor, distributor. So there is a flow of money. So that's what I told. So how national income or GDP growth rate is influenced by, sir? Consumer private expenditure, investors expenditure, government expenditure also. Which means economic survey is pointing out that out of total GDP growth, major push is coming from two. That major push is coming from C, private consumption expenditure, and I, investment. These two are the major pillars which are pushing the overall GDP growth rate. So this is what is the opening state of the economy pushing the growth frontier. Actually what all I am discussing is chapter 1 summary only I am discussing. In economic survey there is a chapter 1 called as state of economy pushing the growth frontier. There they are trying to explain all these numbers. Also you will study something called capital formation. There is a concept called capital formation. So what is the meaning of capital formation? Any investment that you focus on will have multiplying effect on the economy. Multiplier effect we call it as. Now what's meaning of this? See, anything that we invest today, the return is going to come in future. Meaning you are also investing time today so that you will get return in the future. So capital formation is again two aspects. physical capital formation, human resource capital formation. Physical resource capital formation means infrastructure, road, railway, aviation, building, structures, that is physical capital formation. Human resource capital formation means skill development, training of the people. So this is capital formation. As capital formation increases, it has multiplying effect and our economy is expected to grow further. So again, if you look at digital public infrastructure, government is developing not only physical infrastructure, look at the word, digital public infrastructure. Look at the digital payment, the digital transactions, CBDC, UPI, UPI 123 Pay, NPCI, RuPay. So look at the investment and the volume that government is focusing on digital public infrastructure. So why did economic survey estimated Indian economy would grow in the range of 6.8 to 7.2? They gave the reasons for all this. Look, so in fact all this is only economic survey chapter 1 summary. So chapter 1 is saying, despite the problems in the global market and domestic market, our economy would grow in the range of 6.8 to 7.2, and our nominal GDP last year was this many lakh of crores, and we got good investment, FDI, FPI. And if you look at major growth driver is C, private consumption expenditure, and I, investment expenditure. So apart from this, supporting to this, capital formation is increasing. See, when we are spending money on infrastructure, meaning what is happening? Money is moving from that contractor to that employee to finally to the public only. So the more the circular flow of money, the more the economic activity. Physical capital formation is increasing, human capital formation is increasing, and government is focusing on digital public infrastructure also. Because of all these positive circumstances and because of all these macroeconomic conditions, we expect Indian economy would grow in the range of 6.8 to 7.2%. Also, if you look at, whenever we talk about overall, there is one word which India is using. Our economic survey talks about, we want to become or we want to achieve strategic indispensability. Sir, what is meaning of strategic indispensability, sir? We should offer good quality services because India is already known as office of the world. Because of India's expertise in service sector, so we know that we are called as office of the world. So when you offer good quality services like nobody else in the global market, we will not only important, we will also become inevitable. That is called as strategic indispensability. Indispensable meaning there should not be any alternative. Meaning, let's improve our services, let's improve our capabilities, let's improve our importance in the global market. So we are able to protect ourselves from vulnerabilities from the external market. We will become very much important for the global economy. That is called as strategic indispensability. In simple, try to increase our trade volume, try to increase our quality of services, try to focus on improving our expertise which we are already having in service sector, try to improve manufacturing capabilities. Let's try to become very important for global supply chain. Let's try to become very important for the global economy as well. That is called as strategic indispensability. This is what the word is used in economic survey. So where they talk about, and one of the major change that economic survey talks about is, so most of you know already about this, national accounts and index of industrial production. National accounting system, meaning NSO estimations, base year would be revised to 22 to 23. index of industrial production also base year would be revised to 22 to 23. The process will be completed by the end of 26. So, which means for India, for national income estimation, earlier we used to follow, NSO used to follow 2011-12 as the base year. The 2011-12 base year would be revised to 22 to 23. Also, index of industrial production also base year will be revised to 22 to 23. The process would be completed by 2026, meaning, so we are going to come across very soon. So, revised base year for India's national system of accounting, meaning GDP estimation, plus IIP, index of industrial production also base year would be revised to. The reason why, what happened, sir? Link to current affairs. IMF has given C rating to India's NSO related to NSO's estimations of GDP. Meaning when NSO is estimating that our GDP growth rate would be approximately this much, International Monetary Fund has given C rating, second lowest rating for our NSO estimation of national income. The reason that IMF has given C rating to India's NSO is our base year is outdated. There is too much delay in collection of the data. There is a time lag in processment of the data. And while collecting the data, so it has some inclusion, exclusion errors. So that's the reason why IMF has given C rating to India's NSO for estimation of national income. So before itself, our government decided that we would revise the base year earlier from 2011-12 to the new base year would be 22 to 23. So all these are mentioned in chapter 1. And one very major important global recognition for the Indian economy is there is something called sovereign rating. So what is the meaning of sovereign rating, sir? How good a country is for investment purpose. Different investment agencies in the global market like S&P, Standard & Poor, so apart from that Moody, Morningstar, DBRS, so R&I, so these are the global rating agencies. Just like which movie to go, we look at the rating. Foreign investors look at in which country to invest based on this sovereign rating. So one of the major important update for Indian economy is whenever we talk about, so global sovereign companies are telling that let's move towards, or because of India's economic situation, so most of the agencies they have given BBB rating. BBB rating means it's good because safety and you can say investment grade. What does it mean? It is good to invest. It is safe to invest and it is good to invest in a country. This is the meaning of BBB rating. So who has given BBB rating to India's economy? Most of the global rating agencies. It's upgrade for the Indian economy. Meaning these sovereign rating agencies are telling that yes, India is safe to invest. Is it okay now? Screen, can you see it? Yes. So it is good to invest and it is safe to invest in a country. When credit rating agencies have given BBB outlook. BBB outlook means good outlook and positive outlook. It's okay, you can invest. It's okay, it is safe. Meaning, it is a recognition. It is a recognition by the global agencies that yes, the regulatory environment is good in India. It is safe for your investment. So apart from that, if you look at so the numbers in chapter 1, probably which we might know from exam perspective. One very important observation that is in the last overall, our forex reserves, in excellent sector also I'm going to touch, our forex reserves almost touched $701 billion and it is more than enough to meet 11 months import cover. We're going to cover, I'm going to explain excellent sector separately. And also if you look at the first chapter, They are trying to say our capital expenditure is around capex, we call it as capex, we keep on calling it as. So last year, if you look at overall capex percentage seem to be roughly around 4% of GDP. So capex is increasing, capital formation is increasing, sovereign rating is given safe and good. So because of all these circumstances, we expect Indian economy would go in the range of 6.8 to 7.2. Current account deficit is reduced to 0.8%. NPAs are reduced to 2.2%. So by telling all these numbers, they are trying to tell, look, in India, extreme poverty also got reduced to 5.3%. So if you look at the numbers approximately, NPAs are decreasing. What does it mean when NPAs are decreasing? Quality of the assets in the banking sector is increasing. So banks' profits also would increase. So gross NPA is just 2.2% only. So NPAs are decreasing means asset quality for the bank is increasing, recovery is increasing. So in banking chapter you study standard asset, substandard asset, NPA, doubtful asset, bad asset. You'll be surprised. This is 2 decades lowest. NPA ratio is lowest in the last 2 decades. What does it mean? We'll be studying something called twin balance sheet problem. So twin balance sheet problem has reduced, it has become twin balance sheet advantage. Means people who have taken loan from the bank are repaying. Because they are repaying properly, NPAs are coming down. Means it's good for the economy. That's the meaning of it. So gross NPAs are coming down, meaning the borrowers are repaying the banks properly, which means bank's profitability is increasing. Apart from that, so our forex reserves touched almost $701 billion. We have more than 11 months import cover. Anyway, we are going to cover each sector wise also analysis. What is the meaning of import cover, sir? The necessary forex reserves that are required to pay for our essential daily imports is called as import cover. The more import cover you have, the better we are in a position to deal with uncertainties. Now, what is the meaning of forex reserves, sir? So, every central bank maintains forex reserves under 4 categories: foreign convertible assets, gold reserves, SDR, special drawing rights, RTP, reserve transposition. These both are related to IMF. So out of these forex reserves, gold reserves substantially increase for India. This is the order in which we are having forex reserves. And we have this forex reserves roughly to move import cover for next 11 months. Meaning, even if global uncertainty happens, to import essential goods which are required for India for the next 11 months, we will be in a position to pay to the world. That is called as more import cover. So I told you a situation that Goldilocks economy. What do you mean of Goldilocks economy? Huge forex reserves, inflation under control, growth rate is stable. That's why the chapter 1 says India is now in a position to push its reforms, all structural reforms, because inflation is under control, GDP growth rate is optimistic, we have huge forex reserves. So ideal situation to push the reforms. That's why finally chapter 1 says, because of all these positive conditions, because of all these circumstances, we expect that Indian economy will grow in the range of 6.8 to 7.2%. In fact, what all we discussed is a summary of chapter 1. So in economic survey, in chapter 1, they covered all the sectors, banking, forex, all. Now we have to look at micro analysis of each chapter. If we look at the next chapter that they talk about in economic survey is about fiscal developments. So chapter 2 is about fiscal developments. Now I'll give a rough idea here. Most of you know about FRBM Act. So FRBM Acts 2003 talk about revenue deficit, fiscal deficit, debt to GDP ratio. So what is meaning of revenue deficit? Revenue expenditure is greater than revenue receipt. That is called as revenue deficit. What is called as fiscal deficit? Total expenditure is greater than total receipt, excluding borrowings. We should not consider borrowings. So revenue deficit indicate that the government is not having sufficient resources to run the administration. Government expenditure is more, government income is less. That is the meaning of the word revenue deficit. Revenue deficit is declining, means good only. Government position is getting improved. Revenue deficit is decreasing means government income is increasing, government expenditure is decreasing. Fiscal deficit. What did I say? Fiscal deficit is the difference between total expenditure and total receipt. However, non-debt receipt only should be considered. Debt receipt should not be considered. So, fiscal deficit is decreasing. Means what? We are in a good financial condition. Simple. Deficit is decreasing means our income is increasing, expenditure is coming down. So, if you look at numbers, how can you say that fiscal policy or fiscal position is getting improved? So, whenever we talk about fiscal deficit, so numbers if we talk about, earlier, last financial year, number was, so 4.8%. Financial year 2025, it is 4.8%. Now, financial year 26, if you look at the numbers last, so probably financial year 2026 budgetary estimate would be around 4.4. So, in simple, fiscal deficit is in declining trend. Fiscal deficit is declining trend means government is focusing on fiscal prudence. Fiscal prudence means responsible use of the money for public welfare. So, if you remember FRBM Act, Fiscal Responsibility and Budgetary Management Act, we'll study fiscal responsibility, fiscal prudence, fiscal consolidation. So, which means government is taking appropriate efforts to reduce its expenditure and government is trying to improve its income. That is the reason why revenue deficit is coming down, fiscal deficit is coming down. See, one of the major reasons we'll understand the tax reform that government introduced. Now, if you look at the numbers, fiscal deficit earlier was 4.8, it is expected to reduce to 4.4, and interestingly, one more, revenue deficit is also expected to decrease, meaning when fiscal deficit, revenue deficit is decreasing, if we try to understand it that, okay, so overall government spending is coming down, government income is trying to increase. Now, apart from this, why, in a simple way to tell it, if you don't remember the numbers, government income is increasing, government expenditure is decreasing. Deficit is decreasing meaning income is increasing, expenditure is decreasing. Can we say that? What measures have helped in getting this good financial numbers or good data? Answer is very simple. Most of you know, you studied something called GST 2.0. In GST 2.0, what government has done, instead of earlier multiple slab rates of 0, 3, 5, 12, 18, 28, so GST 2.0 listed out only two slabs. Out of those two slabs, 5% and 18%. Also, government simplified income tax related policies, one tax, one return, faceless assessment, honor the honest. Also, government focused on simplifying the tax compliance, tax procedures. So, which means the time taken for the IT return processing also drastically reduced, and more people are filing IT return, and more people are willing to comply with the tax norms because of the simplification of the procedures compared to previous. I am saying the word compared to previous. So, apart from that, we implemented something called faceless assessment in tax return. So, to tax return processing, to ensure transparency, to ensure neutrality. So, because of which tax revenue for the government is increasing. And if you look at one of the major push is GST 2.0 from September 30th. Now you'll understand the logic. So earlier we have this many slabs 0, 3, 5, 12, 18, 28. Now we consolidated GST slab into 5% and 18%. When GST slabs got reduced to just to 5% and 8%, 18%, what happened to prices of several goods? Prices of several goods, especially automobiles, electronic items got decreased. More people purchased two-wheelers and cars after GST got reduced. So when goods prices decreases, what happens to expenditure? When expenditure increases, what happens to demand? Obviously, what is expected of GDP growth rate? So one of the major push for reducing fiscal deficit is increase in government income. From where the income came, sir? So one of the examples is GST 2.0 reforms. So of course, because of simplified procedure of GST 2.0, on several goods and services, comparatively prices got decreased. So people started spending more, people started buying more. So expenditure is increasing, demand is increasing. That's the reason why our GDP growth rate is expected to grow. So link they are telling, look, this is what happened. Now we'll study a concept called tax buoyancy. What is the meaning of tax buoyancy, sir? It examines relationship between GDP growth rate and tax revenue to the government. If GDP growth is more, we expect tax revenue for the government also to increase. So if GDP is growing more, GST revenue to the government is also increasing. Meaning GST buoyancy is more for the government. What does it mean? As GDP is growing, the income for the government from GST is also increasing. This is called GST buoyancy. So GST buoyancy is more, which means roughly numbers says that GDP is increasing. That's what we are trying to say. Now one more number in this second chapter called fiscal policy. Government is trying to tell us that government is more committed for development of capital expenditure. That's why capital expenditure is 4% of total GDP in financial year 25. So what does it mean, sir? Government gradually increased capex, capital expenditure, to 4% of GDP in the last financial year. Meaning, if government has 100 rupees, 4 rupees is going for capital expenditure. So if you remember, there is something called golden rule of borrowing. So what does this golden rule of borrowing says? Ideally, budget should be in surplus. If not, budget can be balanced. If budget is in deficit, there is nothing wrong in borrowing. The borrowed money should be used for capital expenditure, income generation. Meaning we are borrowing and we are trying to allocate more borrowed money towards capital expenditure. So most 50% of this capital expenditure is on road infrastructure and railway infrastructure. So when you develop roadway and railway, we are creating public assets which would generate income in the future. So in simple, capital expenditure of the government is increasing. Last year, it touched around 4.0 of total GDP. So in simple, the summary of entire second chapter is that, look, we are spending more on capital expenditure. Roadway, railway infrastructure is our focus. Revenue deficit got decreased. Fiscal deficit got decreased. Tax buoyancy is improving. And GST buoyancy especially is more because of simplification of this. More and more people are willing to file tax returns. And we introduced one nation, one ITR. We're planning to introduce one nation, one ITR. Faceless assessment. So honor the honest. So and good sovereign rating. Because of all this, fiscal condition is good. Macroeconomic condition is good. So it means government is showing its commitment towards reducing targets. Now what are the targets? FRBM targets. See, FRBM targets says fiscal deficit should be reduced to 3% and debt to GDP ratio overall should be reduced to 60%. Of course, central government 40%, all the state governments together 20%. These are FRBM targets. Now, sir, our fiscal deficit is not 3%, sir, not 3%, but if you look at earlier it was 4.8, now it is expected to come to 4.4, which means fiscal deficit earlier for financial year 25 was 4.8, now it is 4.4, expected in financial year 26, meaning we are trying to reduce gradually to fiscal deficit to how much? 3% over a period of time. So we are in the process of achieving fiscal deficit target in a medium term. So they are not saying immediately next year fiscal deficit will become 3%. No, we are in the process of consolidation, 4.8 to 4.4. So revenue deficit also got decreased to 0.8. So in simple, if you look at, also capital expenditure is having multiplying impact. So what do you mean of multiplying impact? The more government spend on capital expenditure, the more the circular flow of money, the more the economic activity. That is called as multiplying impact. So today morning I gave money to you. You gave that money to somebody else. They gave that money to somebody else. Multiplier effect, multiplying effect. So capex will have multiplying effect. Fiscal policy is good. Fiscal deficit is decreasing. Revenue deficit is also decreasing. And tax buoyancy improved. Tax revenue to the government is increasing. Compared to COVID-19, the gross tax revenue returns and gross tax revenue filings also are increased. So second chapter summary is all this, where they're trying to tell, look, all these are ideal conditions because of which we are trying. And one more major source for the government revenue was surplus transfers. What do you mean of surplus transfers, sir? Surplus transfers means profit made by PSUs and profit made by RBI. So this would be passed on to whom? Government. So if you remember in banking chapter you study, Bimal Jalan Committee, Economic Capital Framework, suggested surplus transfer of RBI. So when a public sector undertakings are making profit, when RBI is making profit, so they are passing on the surplus. So last year around 2.68 lakh crore is passed on by this PSUs and RBI to government. So one of the major reasons why fiscal deficit got decreased. Very simple, tax income got improved and surplus transfers got improved. That's the reason why fiscal deficit got decreased. So this is the link. So this is the essence of second chapter in which we are talking about. So why we are in a good financial condition, sir. Now apart from that, if you look at third chapter talks about monetary management. So chapter 3 summary, if you look at inflation, monetary policy, banking, NPAs. So in simple it is called as monetary management. So this is what is third chapter in economic survey. So if you look at the numbers, before going to numbers, you know that there is something called inflation targeting. So what is our inflation targeting? Approximately 4% plus or minus 2%. So Urjit Patel committee said inflation target should be in the range of 4% plus or minus 2%. Also you know that RBI has different monetary policy stances: accommodative monetary policy, neutral monetary policy, calibrated tightening monetary policy. Meaning based on inflation and GDP, we will increase money supply, we will decrease money supply. We are observing the trend for the last several bi-monthly monetary policies. RBI is reducing the repo rate, RBI is reducing the interest rate. Why RBI is able to reduce the repo rate? That is because of our inflation is under control. So if you look at, sir, how can you say that monetary management and financial health is good? Because I told you earlier, numbers, the number is bank gross NPAs, non-performing asset, is reduced to 2.2%. Now you know When bank gives loans, the assets are classified into standard asset, SMA 0, 1, 2, NPA, substandard, doubtful, bad asset. So NPAs are decreasing, meaning people who borrowed from the bank are repaying. Standard asset means those who are repaying principal and interest regularly, they are called as standard asset. So for 30 days they don't repay, SMA 0. Up to 60 days if they don't repay, SMA 1. Up to 90 days if they don't repay, SMA 2. If it is overdue for more than 90 days, NPA. For overdue for more than 1 year, substandard. Up to 12 months. Overdue more than 1 month, doubtful. Bad asset means nothing is recoverable. We use two words in banking chapter. Haircut, write off, waive off. What is the meaning of haircut? Haircut is the difference between total loan given amount and repaid amount. So people who borrow from the bank are not repaying properly, meaning haircut is more, losses are more, bank profits will decrease. But if NPA ratio is small or NPA ratio is less, it is 2 decades lowest. NPAs are decreasing, meaning asset quality is good for the bank, meaning more and more borrowers are repaying the loan to the bank. Bank financial condition is good. So this only in economic terminology we use the word from twin balance sheet problem to twin balance sheet advantage. So earlier the borrower balance sheet is in problem. The company or the organization which took the loan was not repaying the loan because its bank balance sheet is also in problem, which was called as twin balance sheet problem. Now from the twin balance sheet we moved towards twin balance sheet advantage. In simple, more and more people are repaying the loans to the banks. That's the reason why bank profitability is increasing. Means it's a good health for overall macroeconomy. When a person would repay the loan, that person's income is increasing. That's the reason why when a person's income increases, what happens to consumption, what happens to expenditure? So overall good economic health is there because the number is NPAs got decreased. Now apart from that, in banking chapter you will study bad bank, asset quality review, prompt corrective action plan, insolvency bankruptcy code, IBC. Because of all these reforms, our NPAs are coming down. So whenever we talk about overall NPA is coming down is a good. And again, most of you know, one state, one RRB. In banking chapter we will study once again. What is the meaning of one state, one RRB? Consolidation. Several RRBs are clubbed into, so for each state ultimately would be one RRB, one regional rural bank. So around 196 RRBs are being reduced to just 28, and there is a clear-cut policy of the government for each state, one regional rural bank would be there. Meaning different RRBs in that state would be consolidated. So this is called as one state, one RRB initiative. And also for most of the time in the last year, whenever we talk about, India led the world in IPO. So India is the leader in terms of in financial market issue of IPO. IPO means initial public offer. And for the first time, a company or the promoters are listing their organization in financial market called SEBI and stock market, stock exchange, bull, bear, NSE, Nifty. For the first time when a company is offering its shares to the public can invest for the first time. That's why that is called as initial public offer. More initial public offers are offered or more IPOs are happening in Indian financial market, meaning the public and the investors are having more trust in the market. That's the reason why people are subscribing to IPOs. So more people are subscribing to IPOs means more trust in the market. They expect that they would get return in the future. So India is also one of the leading players in IPO. So initial public offer. Then if you look at India's gift city is known for real-time currency settlement. So all of you know that there is something called gift city, Gandhinagar. So this gift city is coming up with real-time foreign currency settlement systems. So we are telling that we are so fast. You will keep reading something called Vostro account, Nostro account, per currency settlement, trade settlement. So gift city also, which is located in Gujarat, so probably Ahmedabad, is providing quick foreign currency settlement. So how can you say that, sir, overall the monetary management is good? And one more major important point that we need to remember is, all of you know that there is something called Sabka Bima or Sabka Raksha Act 2025. Heard about this? Sabka Bima means for everybody insurance. Sabka Raksha, for everybody protecting. 2025 Act, it permitted 100% FDI in insurance sector. So Sabka Bima, Sabka Raksha Act 2025 focuses, after COVID-19, let's try to improve insurance coverage, comprehensive insurance coverage, both insurance of life as well as non-life insurance, health insurance, so general insurance, all. Government permitted 100% FDI in insurance, so which is a good step because we want to bring so many people under the insurance coverage, which is called as Sabka Bima, Sabki Raksha Act 2025. And in fact, after COVID-19, the people who are taking insurance policies are also going to increase. So this is chapter 3 summary. In simple, probably you can remember this number. How much percent FDI is suggested is in insurance sector right now? 100%. What is the objective of Sabka Bima, Sabka Raksha? Improve health coverage as much as possible, improve life insurance cover, improve non-life insurance cover, improve health insurance cover, non-health insurance cover. Just overall insurance coverage should be increased. Apart from that, how can you say that India's banking condition is good? Because NPA ratios got decreased. This is 2 decades lowest. So look at the word, 2 decades lowest. Meaning in the last 20 years, our NPS never have reduced to this much percentage. That is because of good overall conditions. That's why haircut is less for the bank. Asset quality is good for the bank. It's not a twin balance sheet problem. It's a twin balance sheet advantage. So this is called as chapter 3 about financial management. So probably next we can think about chapter 4, external sector. So you know about current account, capital account, BOP, so currency exchange rate system, stability, all that. So if you look at in external sector, interesting things, whenever we talk about, for the first time, India's forex reserves in January 2026 touched 701.4 billion dollar to be precise. Our forex reserves for the first time touched 701.4 all-time high, which means this is the highest for us, for our forex reserves, 701.4 billion dollar, which indicate that we can comfortably meet next 11 months import cover even if there is global uncertainty. I told you already what is meaning of import cover. The forex reserves that are maintained by central bank to meet its daily essential imports is called as import cover. Meaning we will be able to pay to the world for the next 11 months for our essential imports. It is good. So we have almost import cover of 11 months. For the first time, our forex reserve touched all-time high of 701.4. And if you look at one of the previous year questions was, arrange the India's forex in terms of the volumes. High volume is foreign convertible assets, then is gold, then is SDR, then is fourth is RTP, reserve tranche position. Also, from last year, now interesting number, so which we talk about, current account deficit. Current account deficit is decreasing. I'll explain what's meaning of current account. You know already most of. Current account deficit for the financial year so was actually 1.3%. In financial year 2026, current account deficit is reducing to 0.8%. Now, what is the meaning of current account, sir? In the international trade, in BOP, the transactions which do not alter asset and liabilities are shown under current account. BOT, BOTS, transfer payments, remittances. So, current account deficit is decreasing, meaning in simple, our exports are increasing, our imports are decreasing. So current account overall deficit is decreasing, means it's a good positive trend that overall our financial position is increasing. So also if you look at exports numbers, last year, so India's exports touched around $825.3 billion. Total India's exports touched $825.3 billion, meaning our exports are increasing. Our exports are increasing. That's the reason why our current account deficit is expected to decrease to 0.8 in financial year. So our current account deficit is decreasing, meaning we are in a good position in the international trade where our dependence on foreign markets is coming down. Our exports are increasing means what? Our production is increasing. More income for us. So if you look at one more number, India is still largest receiver of remittances in the world. So why current account deficit got decreased? One more reason, India is still the largest receiver of remittances. So remittances are shown where current account or capital account, current account or capital account, current account. India is the largest receiver of remittances in the world last year also. But roughly the remittances received by India in the last year is $135.4 billion. No need to remember exact numbers, but still India is the largest receiver of remittances in the world. What does it mean? More of Indian people are working abroad and they are sending that money back to us. Inward remittances, outward remittances. Also, India emerged as global leader in greenfield digital investment. So India signed free trade agreements with so many countries in the last year. Recent being US, earlier being European Union, earlier being United Kingdom was negotiated. That was under Peru. Heard about Peru? So if you look at in 2025, so India Oman CEPA negotiations are going on. India New Zealand FTA. So of course European Union were able to close the deal. US also we were able to close the deal, which means India understood that we need to focus on not just import substitution. We should focus more on export orientation. We should not just depend upon only foreign countries for imports. We should manufacture alternative to imports. We should also manufacture goods which are on par with the global standards. We should also become the exporter. Strategy is from import substitution to export orientation. Meaning, try to manufacture in our own country. Don't depend upon foreign countries too much. And let's try to manufacture something so good that it will even be exported to the world. So import substitution to export orientation. So these are numbers which will tell you overall external sector condition is good. So, because India is the world's leader in greenfield digital investment, and if you look at, so forex reserves touched $701.4 billion just now I told. And one interesting thing that is observed in India is BOTS. What is BOTS? Balance of trade in service. So here, because of software, IT enabled services, medical tourism, spiritual tourism, trade surplus is reported in BOTS. So what is the meaning of BOTS, sir? Balance of trade in service. It talks about incoming and outgoing services, intangible values. So India's BOTS reported a surplus of around $188.8 billion. Numbers are not important. You just need to know BOT, we have huge trade deficit. BOTS is in surplus. So this BOTS reserves will help in paying towards current account deficit. That's the meaning of it. So if you look at overall circumstances, yes sir, external sector is good and we are following principles of WTO, most favored nation, national treatment, reciprocity, positive list, negative list in international trade. And of course, external debt was around $746 billion. So are we borrowing? Yes sir. So our external debt is $746 billion. However, golden rule of borrowing. What is golden rule of borrowing? Borrowed money should be used for income generation, capex, capital expenditure. So in simple, no need to remember all these numbers. Just you need to remember only forex reserves. All time high, India touched $7.14 billion reserves. It is sufficient for next 11 months import cover. Again I told you, India's current account deficit is decreasing is a good trend. Meaning our import dependency is decreasing. We are focusing more on exports. We have realized don't depend upon anybody too much because dependency is leading to exploitation, dependency is leading to blackmailing. See, look at what all USA has done. H1B visa fees increased to $1 lakh per year. So tariffs, high tariffs on India. So that is because of our dependency on them. So we realized, no, import diversification, export diversification, import substitution and export orientation. So that we will become important, indispensable in the global market. Our dependency on somebody should not lead to exploitation. Dependency should be based on reciprocity. Dependency should be based on give and take respect. So it should not be based on exploitation. So this is the basic idea of external sector. Sir, external sector is good, banking health is good, so GDP growth rate is stable. That's why now government has the flexibility. Now coming to next chapter is actually inflation. Economic survey, next chapter talks about inflation summary. I already told you in the starting itself. Central bank need not worry much. Why central bank need not worry much? Because inflation is tamed, well anchored. So what does it mean? Inflation rate is lowest since inception of CPI. Inflation is lowest since CPI series C started. Means very good only. So inflation should not go not more than 6%, should not fall below not more than 2%, because our ideal is 4% plus or minus 2%. But we reached inflation lowest from since CPI. What is CPI? Consumer Price Index. So you know about WPI CPI. So wholesale price index calculates inflation at wholesale prices. So WA considers only goods. CPI considers both goods as well as services. Basket of goods weightage. WPA, more manufactured good items are given more weightage. CPA, food and fuel and beverages are given more weightage. So if you look at the numbers about inflation, headline inflation touched almost 1.7%. One of the lowest in December 2025. Good. Apart from that, food inflation so also decreased core inflation also decreased. That's why the chapter summary is inflation is well tamed and inflation is within the limit, within the threshold of the limit. Core inflation remained at 4.62%. So what is core inflation? From overall headline inflation, if you remove food and fuel, what you get is called as core inflation. Core inflation is also stable. Food inflation also got decreased. Headline inflation also got decreased. Meaning, the purchasing capacity of the people is more because prices are under control. So inflation overall is within the range of 2 to 6 only. Not much to worry about it. However, initially, food inflation was more in the rural area, and later, so food inflation in the rural area also got decreased. Actually, food inflation in the rural area was high in the rural area. Generally observe, food inflation will be high in the urban area compared to rural area. Why, sir? Because in the rural area, we have all access to fruits, vegetables, and so many food articles. Urban area, we are more dependent on processed food, artificial food, junk food, and we are dependent on the rural area for food products, urban area. Generally, food inflation will be high in the urban area, low in the rural area. But in some months in the last year, food inflation in the rural area also was high, but over a period of time, it got reversed. And you will study something called inflation targeting, Operation Top, Operation Green, Tomato, Onion, Potato, Price Stability Fund, cobweb phenomenon. So that's what I told. Entire syllabus summary is economic survey. Every chapter, what all happened in last 1 year. By considering all this, IMF and RBI predicts next year, financial year 2026, inflation would be around 4%. So by considering all the good circumstances, IMF and RBI would say next year, probably inflation would be in the range of 4% only. So which means overall inflation is under control, meaning purchasing capacity of people is good. So meaning the measures taken by the government, now you'll understand the link. Because inflation is under control, our focus is on increasing GDP growth. Our focus is on increasing GDP growth rate. So government is focusing on fiscal stimulus by increasing government expenditure called capex. And what RBI is doing? RBI is reducing policy rate called as repo rate, and RBI is reducing interest rate to increase money supply, so to push GDP growth rate. Why it is possible? Because inflation is under control within the threshold. So that is the macroeconomic link. Our inflation is under control within the limit of 2 to 6 only. So we need not worry about inflation now. So we have to focus on GDP growth rate. So to increase GDP growth rate, government is increasing government spending on capex, capital expenditure. So money supply would be more, so that the economic activity would be more, GDP growth rate would be more. Supporting to this fiscal stimulus policies of the government, RBI is going for decrease in repo rate, so which you call it as, so not tightening, it is easy monetary policy. It is easy, accommodative monetary policy. So because of which we want to increase money supply, we want to push GDP growth rate. That's why starting itself we told Goldilocks, inflation is under control, GDP growth rate is stable, forex reserves are very good. So now we have the time, now we have the flexibility to focus on our desirable targets. So this is about inflation. In simple, inflation is within the limit and the lowest rate since inception of CPI series. And if you look at, India has seen the highest reduction in the headline inflation in 2025. India has seen highest reduction in headline inflation among major economies in 2025. Meaning compared to many countries in the world, major economies, headline inflation declined highest in India only. That is the meaning of it. So number is actually 1.8% reduction. No need to remember the number, but the essence is same. Compared to major economies of the world, the price rise in India is under control. So inflation is within the limit. So these are what is you supposed to remember. But one of the reasons why core inflation, what do you mean of core inflation? From headline inflation minus food and fuel is called as core inflation. One of the reasons why core inflation increased, it is because of metals, copper. Because core inflation is one of the indicators, headline inflation is one of the indicators. Core inflation meaning headline inflation minus food and fuel. So one of the reasons for increase in core inflation, it is because of gold and silver surge. So gold, silver, copper, so metals, demand for the metals is the reason for increase in core inflation. So most of Indians are thinking gold is the safest investment option to protect themselves from inflation. So that's the reason why, because of demand for gold, because of demand for silver, because of demand for metals, so precious metals, so core inflation is more. Major reasons. Core inflation means what? Other than food and fuel, other prices are increasing. One of the major demand for goods is precious metals, gold and silver, because people thought best way to protect from inflation is investing in gold. So this is about basic idea. Chapter 6 talks about agriculture. So in this chapter 6, whenever we talk about agriculture, so overall around 46.1% of people depend upon agriculture for livelihood. Roughly its contribution to GDP is around 19%, which means still 46% of Indian population depend upon agriculture. Contribution to GDP is only around 19%. So if you look at agriculture sector growth, overall agriculture sector growth, so we need to understand for the last 4 years or for the last 4 to 5 years, agriculture sector growth has been around annual rate of 4.4%. But anyway, if you look at in agriculture, livestock and aquaculture are the major key engines of agriculture. So look at the word aquaculture and livestock are main key drivers of agriculture sector growth. Also, if you look at India's agricultural sector growth is more than the global average growth. India's agricultural growth is more than global average growth in the last year, which means we introduced several agriculture sector reforms. Namo Kisan Didi Dreams, Pradhan Mantri Dhan Dhanya Krishi Yojana, One Nation, One Fertilizers, nutrient based subsidy. Then if you look at mechanization, e-norm, farm subsidies, drip irrigation, so new methods in agriculture, national mission on high yielding seeds, support to horticulture. So because of the reforms that are introduced by agriculture, India's average agricultural growth is more than the global average growth. Trend is important. That's the reason why they might ask. As it is, statement can be picked up in the exam prelims. India's agricultural growth in the last year exceeds global average growth. So apart from that, the sector grew at an average annual rate of 4.4%, meaning agricultural sector growth roughly is around 4.4%. Out of agriculture, major GVA, gross value addition, is coming from aquaculture and livestock. So which means agriculture sector is also growing. Means what happens to farmers' income? Farmers' income is also increasing. Pradhan Mantri Dhan Dhanya Krishi Yojana, 100 aspirational agricultural districts are developed to boost productivity, storage and credit. Apart from that, Pradhan Mantri Fasal Bima Yojana, PACS, Primary Agricultural Credit Societies modernization government announced. So in agriculture chapter, one nation, one ration card, e-norm, electronic negotiable warehouse receipt. So all the reforms that were introduced in agriculture helped in improving of the agriculture sector. So only 2 points you have to remember. 46% of population depend on agriculture, contribution is only around 19%. Second trend that is observed, India's agriculture sector growth rate is more than global average growth. Roughly, major key drivers of agriculture is aquaculture and livestock. So, next chapter is actually industries. So, if you look at the present circumstances of industries or industrial sector, government is focusing on more and more indigenous manufacturing. That's the reason why Make in India, Startup India, Assemble India, Digital India, giving subsidies. And one of the major focus in industry sector, so whenever we talk about, is we want to become indispensable in the global market by increasing our manufacturing capabilities. Because China is popularly called as manufacturing hub of the world. In fact, they are called as factory of the world. India is popularly called as office of the world. So office is competing with factory, factory is competing with office. So we want to make ourselves indispensable by improving our manufacturing skills and manufacturing capabilities. So that is the reason why in industrial sector, if you look at, MSMEs are considered as major growth engines, micro, small and medium enterprises. I told you to find out definition also. What is the definition of micro, small and medium enterprises based on investment and turnover? So MSMEs mainly accounts for 35.4% of manufacturing, apart from that, so this MSMEs would provide, so if you look at, they're very much important for exports because 48.6% of exports are coming from this. They're also contributing. So if you look at overall GDP growth rate, so roughly around 31% of GDP contribution, around 31% of GDP contribution. So which means micro, small and medium enterprises are identified as major key engines, and also PM Gati Shakti, which means implement the pending infrastructure projects in a much bigger manner. It will push the industrial sector growth. So apart from that, if you look at in the budget 25-26, National Manufacturing Mission was announced. National Manufacturing Mission in the budget 25-26 was announced, and it has interesting targets. What are the targets, sir? The targets is by 2030, manufacturing sector contribution should be increased to 25% of GDP. Apart from that, one more comedy goal, 143 million jobs should be created. How many, sir? 143 million jobs. So look at the word, 143 million jobs should be created by when? By 2030. And merchandise exports means goods. Merchandise exports should reach to $1.2 trillion from this manufacturing. That's what it is called as National Manufacturing Mission 2025-2026. It was announced, and we are trying to have all this target: production linked incentive scheme, design linked incentive scheme. And India is the second largest producer globally. Demand is driven majorly by mega infrastructure projects because government is focusing on capex, and MSMEs are identified as major drivers of engines. Of course, we are focusing from import substitution to export orientation. But one of the notable points is we are dependent on semiconductors. We are importing semiconductors mainly from Taiwan and China. So government started indigenous manufacturing of semiconductors. India semiconductor manufacturing, three places you have to remember: Sanand, Dholera, they both are in Gujarat, Morigaon, Assam. So these places we are manufacturing or we are establishing our own semiconductor manufacturing plants, which means let's not depend upon Taiwan, let's not depend upon China much for semiconductor chips, because Sanand and Dholera in Gujarat, Morigaon in Assam, we are establishing our own semiconductor manufacturing plants, which means we are not much dependent on global supply chain. You cannot depend also because of geopolitics. Anything can happen from any time. So this is about basic idea about industries. So then when you go to from industries to service sector, or you can say the major engine growth for us is service sector. So rightly India is called as office of the world, and India is known for medical tourism, India is known for spiritual tourism. So also most of FDI is coming to India in service sector. Service sector is backbone of India's, probably, because the numbers that you look at, what are the numbers, sir? 30% of population depend upon livelihood. Along with that, so number, if you look at 53.6% gross value addition, 53.6% of gross value addition in GDP is coming from service sector, meaning 30% of population depend upon service sector, but contribution to GDP is almost around 54%. So still India GDP growth rate is primarily led by service sector. So Assemble India, Skill India, Design Linked India, medical tourism, spiritual tourism, blue economy, orange economy, growth in the space sector. So all these are major reasons why our service sector is growing, because focus on marine development in blue economy, focus on creative economy called orange economy. So spiritual tourism, medical tourism, space sector, India's space, in space sector overall performance, all is contributed to service sector. So numbers, if you look at only one obvious number, service sector around offers 30% of livelihood, but contribution to GDP is almost touching 54%, which means India is still primarily service sector based economy in terms of growth. India is still primarily agriculture based economy in terms of livelihood. 46% depend upon agriculture, contribution only 19%. 30% of people depend upon service sector, but contribution is 54%. Trends like that only questions are asked in the prelims. Okay. Now apart from that, yes, we are improving ourselves in service sector. Then industries, I told you. So basically when you talk about industries, we are focusing on MSME, we are focusing on semiconductor manufacturing, we are moving from import substitution to export orientation. So summary of industries already we covered. I told you industrial sector earlier was growth stagnated. Now we are moving because national manufacturing mission, MSME, and we realized we should focus more on capital goods production. What is the meaning of capital goods production? The goods which are used in the process of producing other goods are called as capital goods. So industrial credit, industrial corridors, so more focus on logistics, more focus on mobility, all that we are trying to focus. Then there is something called chapter 9 is about infrastructure. So already you know roadway, railway, aviation, capex, capital expenditure, that's we are calling it as infrastructure. But if you look at in capex in earlier was less, but capital expenditure in fiscal year 2026 is 11.2 lakh crore. So which means government is spending almost 4% of total GDP on capex. So roughly it is around 11.21 lakh crore. And there are so many focused areas in infrastructure, especially if you look at PM Gati Shakti, energy, minerals, port connectivity, traffic density, FDA, FPI, greenfield, brownfield, and we are trying to improve national highways expansion by 60% since financial year 14, meaning national highway length is touching around 1,46,000 kilometers. National highway length is increasing means more and more roads are becoming operational. Quick mobility. Apart from that, 11.2 lakh crore is spent on capital expenditure. So if you look at digital connections are also increasing. Railway, annual railway line is also getting increased more than 5,364. And if you cover Bharat Parimala Yojana, Sagarmala Yojana, Viability Gap Funding, Swadeshi Darshan 2.0, Bharatiya Vaviyan Videsha Rules 2020, 100% FDI is permitted in space sector also. 100% FDI in space sector also. Separate organization called InSpace is established. So all these schemes will tell us that government is committed to spending money on infrastructure. Infrastructure, we are focusing on acceleration of the growth. So if you look at, whenever we talk about infrastructure in PPP, public-private partnership is permitted. So brownfield means developing what is there already. Greenfield means starting afresh something new. So in fact in the budget also, you will understand the link tomorrow. So many new greenfield airports are sanctioned. New dedicated freight corridors are sanctioned. Golden quadrilateral push is given. Electrification of railway track is going on. All this tell us, we understand, if we want to come out of middle income trap, only way to come out is increase on infrastructure spending. Because starting itself I told, we are in middle income trap. To come out of middle income trap, you have to balance welfare as well as capex. Okay? Then if you look at probably national ways for Port Ganga also. So which means just like national highways, there is something called inland waterways also. Jal Marg Vikas, maritime development, multimodal logistics, energy, optimal use of energy. So DISCOMs, battery storage systems. So all these are the reforms. Now coming to environment and climate change, if you talk about, renewable energy focus is increasing. Shanti Act 2025 proposed to facilitate private sector participation in nuclear energy also. So if you look at chapter 10 is about environment, not much for us for numbers, but there is one act called Shanti Act. So Shanti Act 2025 is permitting private participation in nuclear energy also. This means we realized we should not depend too much on fossil fuels. We should go for non-renewable energy dependence should decrease. Renewable energy should be increased. So that's the reason why National Nuclear Energy Mission, National Nuclear Energy Mission was announced from 25 to 26, whose target is important for us. Even prelims also you can expect. What is the target, sir? National Nuclear Energy Mission target is 20,000 crore is allocated for this. And by 2047, look at the word, by 2047, we have to produce 100 gigawatt nuclear energy. Target is also important for the exam. So by 2047, 100 gigawatt nuclear energy we should be able to produce from nuclear energy, for which National Nuclear Energy Mission was announced in 25-26. Fund allocated was 20,000 crore. In simple, we are moving towards more and more clean energy. So dependence on fossil fuels would come down as much as possible. So apart from that, if you look at Education and health. So this is chapter 11. So we call it as social indicators or social development indicators. So if you look at, one of the major achievement in India was infant mortality rate got decreased. So in school education we are implementing New Education Policy 2020, PM Sri, Nipun Bharat, all this. But one of the major notable indicator is interesting. According to World Bank definition of poverty line, $3 per capita expenditure for triple P. Extreme poverty, this is a notable number. Extreme poverty in India is less than 5.3%. So recently Kerala came out of extreme poverty, current affairs. Kerala is the first state to come out of extreme poverty. So World Bank defines poverty definition as $3 per capita expenditure per day. By considering that criteria, population who is suffering from extreme poverty in India is less than 5.3%, meaning extreme poverty in India is less than 5%. So what is the meaning of extreme poverty less than 5%? They have the source of income to lead a basic standard of life and they can spend better. So apart from that, Ayushman Bharat health cards, school education, higher education, and government permitted 100% FDI in higher education. Government permitted 100% FDI in higher education. So more and more foreign universities can start their campuses in India. So apart from that, MG Narega scheme is renamed as Viksit Bharat Gramin Rozgar Ajivika Mission, 100 days to 150 days work. Apart from that, Namaste scheme, Datri Abha scheme for tribal welfare development. So what is the use of this Namaste scheme, sir? It is for manual cleaning of the manholes. Instead of manual cleaning, manual scavengers and manual cleaning of the manhole, let's use the AI, robotic, so that we can prevent so many fatalities while cleaning, while doing the cleaning. That is a scheme called as Namaste scheme. Datri Abha scheme is about promoting tribal villages where the produce produced by tribals will be made available for all. So again, Panchamutta target, if you remember, India is the fourth largest in renewable energy capacity. So fourth largest in renewable energy capacity. Also, if you look at, India is focusing on net zero emission target by when? 2070. Indian Railways want to achieve net zero emission target by when? So probably 2030. Then something related to us. So that is only last probably important chapter. Employment actually it's called as. So if you look at employment and skilling, that is the chapter name, chapter 12. Now here one word is there which we might expect in the prelims. Interesting number is there. That number you have to remember. Why? I'll tell you. Female labor force participation rate. Female labor force participation rate is increased to, interesting number, 41.7% in 23 to 24. So earlier, female labor force participation rate was actually 23.3% earlier in 2017-18. In simple, the working women percentage of the population is touching almost 42%, which is a major trend observed. Which means more and more Indian women are now ready to work and we are accepting them in the workforce. But here one word is used, pink tax. See, what is the meaning of pink tax? It is not the tax, but many women, working women, when they are going for the work, for safer transportation they are paying more charges. Which means most of their salary they are paying towards safer transportation only, which is called as pink tax. Burden on women. When women are commuting for the work, most of their earning They are paying for safer transportation. What do you mean of safer transportation? So they want to travel in a much safe and secure way from their office to the workplace to their home, in which they are spending most of the money, which is a burden on the women, which is called as pink tax. So apart from that, pink color job, blue color job, white color job, gold color job, gig workforce is increasing. Gig workers are almost touching 120 lakh. Gig workforce is increasing, almost touching 120 lakh. So overall, if you look at, yes, women are paying more, but we should try to focus. And then one more thing, India is expressing, or India is experiencing an interesting trend called longevity dividend. Now what is the meaning of longevity dividend? If people live for longer time or more time, generally it is not good for economy, because they are dependent population, they are not feeling well, so much money is spent on them. But actually interesting, India is getting longevity dividend. Longevity dividend means aging population is there, but aging population is healthy population. Population is aging, but still it is healthy population, so it is not dependent on the burden on the economy. So India is witnessing a unique situation called longevity dividend. So longevity dividend means economic benefit that would come from aging but healthy population. So more and more old uncles and aunties are there, but they are healthy because they are not dependent on anybody. These two words are important for prelims: pink tax and longevity dividend. Because the word is mentioned in economic survey, probably question might come. And this number, this is interesting number. Female labor force participation rate is increasing because more and more. And one more interesting word which is used, which might come in the exam, most of you know already, something called time poverty. So in India, time poverty is also seems to be increasing. So what is the meaning of time poverty? People do not have sufficient time to spend with themselves and their closed ones because they are so busy in learning, earning. So time poverty seems to be increasing because of multi-dimensional poverty index. Now for exam purpose, pink tax, longevity dividend, female labor force participation rate increased to 42%. And probably if you look at overall numbers again, so AI, Industrial Revolution 4.0 is given importance, artificial intelligence, robotics, Internet of Things, blockchain technology, startup India, stand up India. So overall urbanization, so metro, transportation, urban challenge fund was created. So next chapter is actually urbanization. We completed almost, don't worry. So this chapter is almost urbanization. Only one point is important for us. So more and more population is shifting towards urban areas. So in that, urban challenge fund was created in 25-26. So this urban challenge fund is to improve infrastructure in the cities. So 1 lakh crore is allocated for this urban challenge fund. Main focus is to face the problems of the metropolitan cities. So what are the metropolitan cities problems? Traffic, water problem, floods. So to address this, we recognize that we have to develop more and more small towns rather than the crowded metropolitan cities. So smart cities, planned urbanization, and every million plus city should compulsorily have 20-year city spatial and economic plan. Every million city whose population is about 10 lakh should have a plan for the next 20 years. Spatial and economic plan. How do we use the space? How do we develop that city? Where we should focus on development? All that. Only these two are notable points from urbanization. Anyway, so circular economy, we are reducing e-waste, urban solid waste management, circular economy. So we are reducing e-waste, we are focusing more and more development of metro, we are developing an urban transportation, all this. Finally, if you look at the end of all this economic survey, they say Industrial Revolution 4.0 is a threat for us because globally there is a threat for jobs, and India's service sector mainly depend upon external circumstances. But still, strategic resilience to strategic indispensability. Finally, economic survey will end with this word: from Swadeshi to strategic resilience to strategic indispensability. Meaning, we are manufacturing by ourselves, indigenous manufacturing, Swadeshi. Strategic resilience, despite global uncertainty, we are able to withstand ourselves. Plus, strategic indispensability. Now we have to become global leaders and economic superpower. So the entire summary of economic survey is mentioned in this last line. From Swadeshi to we have to move towards strategic resilience. We are able to withstand the global uncertainties, and to that we are moving to strategic indispensability. So this is how economic survey is supposed to be studied. Once again I am telling, what all we discussed in the class, not important for the exam. All numbers, not important for the exam. When you study the chapter, summary only, you should be able to recollect all the current affairs you study in that particular chapter. So what all 1 year happened in that particular chapter, summary is given in that chapter. But obvious data I told you already. Female labor force participation, GDP growth rate, forex reserves, trend analysis, primary sector contribution, service sector contribution. Mostly I gave all the numbers which are important for the exam. Don't worry, the PDF will be posted in your group also. If you want more and more numbers, if you want more and more schemes still. But this is minimum what you have to do for this year prelims. If you are writing this year prelims, if you are reading economic survey, bare minimum what you have to cover is what we covered in the class today. And it should be covered in the sense that, okay, I know static part, I am seeing the current affairs, I can see what all happened in the economy in the last year. That is how economic survey should be studied. You studied so much of banking chapter. What happened in the banking chapter in last 1 year is mentioned in economic survey. You studied inflation. What happened to inflation in the last 1 year is mentioned in inflation chapter. Okay? So no need to burden yourself with too many pages. The cost benefit analysis is very much required. Okay? Probably tomorrow I will be covering budget highlights. Now you know what happened in the last year. Based on this, only prediction is budget. Based on this, what happens in agriculture, what happens in industry, what happens in service sector, what happens in infrastructure, what happens in employment of last year. Based on last year analysis, expected outcome in the next year only is called as budget. Okay? Tomorrow we'll be dealing with budget, probably same timing. Thank you.